What do you see for equity markets from here then? We see overnight in Asia some optimism around trade boosting markets. Is that sustainable?
Yeah, I think this whole equity rally that we've had this year has generally been rather underloved, underowned. And as a result, when you've had small market setbacks, as we had last week, you've seen sentiment become really quite fragile on very little news flow. And that's obviously quite a good thing for markets, strange as it may seem. What you don't want is you don't want to have that over-exuberance. You don't want to have people falling in love with their stock markets. And right now, you're seeing quite a big amount of skepticism. You're seeing VIX being fairly high. You're seeing fairly fragile measures of investor confidence. And all that means that when you get days like today, where you've got some sentiment, positive news flow on things like Brexit or trade, that pushes stocks higher. And I think that's going to be the theme for the next few months.
So where do you expect stocks to go then in the first half or even this year?
I think the direction's upwards. I mean, it's going to be one where you're going to have pockets of volatility. You're going to have times like you had last week, and it's going to be one of those buy the dip type of markets. However, the nature of the risk assets to own may change as the year goes on. For instance, we all know that the economic data has been rather insipid so far this year, and that means that that's probably going to cap the upside for markets. They won't get into the double digits from here, for instance. I would have recommended, and what we're doing in our portfolios, is to start to shift out from equities into other risk assets like high yield or like emerging debt, as you'll get the benefit of that carry. And I suspect that's going to be the main game plan, if you like, for this year.